everybody, it is John Lone King, and it is Friday, the 19th of December. Literally, what do you got? 5 days until Christmas? 6 days until Christmas? 5, right? It's Thursday. 6. Yeah, it's 6 days. Anyway, super excited to be with you today. I have a lot of things to cover. Most importantly, is we are not going to be going live over the next 2 weeks. So I shouldn't say that. I'm not going to be going live on Fridays. So I will be doing a Monday live stream pretty much going forward. I'll be doing a Dream for All live stream on my Dream for All channel. So that'll be at noon every Monday for the foreseeable future. If you're interested in Dream for All or any down payment assistance program, that's a great place to join me. But if you are looking for your Friday market update, if there's something major that happens, then I will jump in and I will give you an update on Friday, or excuse me, whenever during the week that it happens. But next Friday is the 26th. We're closed. I'm not going to be here. After that is Friday the 2nd, and I'm going to be traveling that day. So we're taking the next 2 weeks off for my Friday market update, just so you know. But let's dive into today's market update and talk about what's going on. So first of all, inflation and jobs report, two major reports that came out this week. The inflation report was showing inflation being lower than what was that's going to go away. Let's do that. Okay, cool. So inflation is going to showed a lower amount of inflation, which is really, really good, technically speaking. Okay, I say technically speaking because the catch-22 is that inflation is the readings are off. The matter of fact, the unemployment readings are off as well because of the government shutdown for a month. And so we're not necessarily sure we can trust those numbers. And so I just want you to be aware of the fact that the inflation numbers are showing inflation is decreasing. The problem is the federal government had to make kind of some assumptions with the numbers. I do think that, as I'm talking to people, as I'm looking at just my family, it does feel like maybe groceries and stuff are coming down a little bit. My Costco bill certainly isn't, but a lot of other things are. And so I think that inflation is definitely moving the right direction. Remember, inflation is critical. Inflation is critical when it comes to interest rates, because if inflation stays high, the Fed's going to keep interest rates high to fight inflation. And so the question is, can we trust this month's data? I think we can, but we'll know more in a month, and that really sucks. Because we've got, the Federal Reserve that met last week. They're going to be meeting again in late January. And in between now and then, I think we're going to stay in the rough interest rate level that we've been at, which is the low to mid 6% range. You can get yourself down below 6% with a buy down or with an FHA loan. So there's some ways to make that work. But here's the deal. Inflation absolutely still matters for interest rates. Inflation is the number one thing that the Federal Reserve keeps talking about and saying, hey, we are focused on this and we are worried about this more than we are worried about unemployment. Now we're seeing unemployment trends also showing unemployment ticking up. So this week we got the unemployment report for November. Should have come out the first Friday in December. It was delayed by a couple of weeks. And so what did that unemployment report mean? That unemployment report meant that we saw more people trying to work that couldn't as a percentage of the economy. Okay. We're seeing more people that are without jobs for a longer period of time. So the statistical numbers aren't as bad as what would be called a recession. But the truth is, and I was reading an article in the Wall Street Journal this morning, and it was talking about the fact that in the current environment, you've got a lot of people who feel like, man, it's hard to get a job. You got all your 20-somethings that are having a real hard time getting a job after college. You've got a lot of people who are struggling if they lost a job in certain industries. And then you got the major fear about what's going on with AI. And is AI going to replace me or my job? Is AI going to make it harder for me to get another job when I need it? Or am I going to be one of those people that, I'm an Uber driver and I'm worried that robocars are going to take over? Well, there are some industries that are going to be more impacted than others, but it's starting to be felt. We're starting to see more companies saying, hey, I'm not worried about growth. I think we're still going to grow. So they're feeling really good about the economy. But the companies are saying, yeah, I feel really good about the economy, but I'm not necessarily going to hire more people to go along with helping the growing business that I have, because I can use automation, I can use AI, I can use technology. So we don't necessarily see technology yet replacing people in mass. But what we are seeing is employers that are pulling back some. And they're saying, you know what, I don't need to hire somebody right now because I can actually use technology to help me get more work out of one person. And so again, the markets are very, very concerned about employment because employment ticking up says the Fed needs to lower interest rates. And so over the next couple of weeks, we're going to be kind of in this holding pattern. But what it is telling buyers and sellers right now is it's telling buyers and sellers that, hey, one thing we have right now is on our side is stability. We have stability in what's happening with the interest rates because they're staying within the same channel. We've got a tug of war going on between interest rates being pulled down because of unemployment and being pushed up because of inflation. And that tug of war is keeping interest rates stable right now. The deal is, as we head into next year, I am seeing more and more buyers wanting to get into the market. That's good for sellers. It's not good for buyers. If you are a buyer and you're saying, hey, I want to buy, you're going to have more competition. Now, maybe we're going to see more sellers come back on the market because the truth is in November and December, a lot of sellers take their houses off the market in order to not be competing with the few buyers that are out there and looking like they're desperate. And so we often see more houses come on the market January, February, and March that had been taken off in October or November. So if we have that same pattern that's happening, then as a seller, you might say, hey, if I wait, it's really good because more buyers are coming. Yes, but more sellers are coming too. And we're not going to be in a position where people are feeling confident about their job prospects, given the increase in unemployment and the uncertainty about how AI is going to play into this. So I don't think we're heading out of this challenge anytime soon. I think we're going to continue in kind of the quicksand that we've been in this market. And that really means that you need to make decisions long-term about what is going to be best for you long-term. Now, what do I mean by what's going to be best for you long-term? What I'm saying is what is best for you is that you need to be thinking about what am I looking at for my job prospects? What am I looking at as far as my monthly payment? Now, I have said a million times, you're not going to be comfortable with a monthly payment. To say, hey, what's a monthly payment that I will be comfortable with is highly unlikely for most first-time homebuyers. You're going to have a stretch payment. The good news is, that payment is going to stay the same and go down over time, with the exception of taxes and insurance. Now, taxes haven't been a major problem. Insurance has. I'm looking at the insurance market in 2026 to hopefully become more stable. I saw an article in the Wall Street Journal this morning that talked about the expectation that insurance is going to stabilize in 2026. And that should be a good thing for homeowners and for potential home buyers. And so there's a lot going on that you need to be making decisions based upon, hey, I'm not going to do this simply because my cousin or my sister said I should do it. I'm going to do it because I believe it's the right thing to do. But remember what Warren Buffett said, to be wealthy moves that he's made that have paid the most in the long run is when he is scared when other people are excited, and he's excited when other people are scared. And so courageous when other people are worried, and worried when other people are courageous. In other words, we're in a time right now where a lot of people are nervous and worried and scared. Then you would likely be best served to be courageous and taking action, because when everybody else is doing something, it's probably too expensive to do. When everybody else is pulling back from it, that's when you have an opportunity to buy. It's anti-cyclical. It's it's opposite of what you think you should be doing. But it's a really, really good example of how I believe you should be thinking in this marketplace. And so right now, I'm going to wrap up here. First of all, I want to talk for a quick minute. It is the holidays, and I want to talk about gift giving. So gift giving is actually a really big part of home ownership for a lot of people. And I want to make sure that if you're thinking about that, whether it be in the holidays, whether it be some other time of the year, and you're thinking, hey, John, I'm interested in helping out a family member to become a homeowner, and I want to give them a gift. Okay, the most important thing is don't give them the money yet. In almost every circumstance, I can't think of any actually, where giving them money ahead of time is helpful, it's either neutral or it causes problems because of how the money is transferred or how we have to prove it. Okay, the other piece is how much are you giving them? How much are you allowed to give them? Some programs require them to have a certain amount of money out of their own pockets. Some programs don't allow any gift money from family members, but that's very, very rare. And so it's about working with a lender like me who has access to all of the different loan programs that are out there to help you decide which one is the right one for you. Don't make the mistake like many of my clients had by making the assumption that, well, my friend did a gift, and so therefore I can do one too, and then they move the money. And now it becomes a problem because they moved it in a way that we can't validate. They they accepted it from a source that I can't allow. So there's lots of nuances to gift giving. And so how to gift funds affects your approval. And it's critical to understand that. It's critical to be knowledgeable in having these conversations before you are giving or receiving a gift. A gift is an amazing way to help somebody become a homeowner. It's an amazing way as you are looking at inheritance and you're looking at helping out your family members before you're gone. Okay, a lot of people look at their inheritances as, hey, I'm going to give it to my kids when I'm gone. But if you have the means, wouldn't you love to be able to see them achieve home ownership and have that stability while you're still around to enjoy it with them? So it's something to think about when you're looking at estate planning and legacy and what is important to you. I think it's really, really critical. All right, last couple of things really quickly for Dream for All. If you are interested in the Dream for All program, I've got a separate YouTube channel. A lot of you are watching right now on that YouTube channel. But if you are watching or interested in the Dream for All program, it is time for sure to start getting prepared. We don't have a date yet when it's going to get released. I'm already talking to a lot of people, and I've done webinars on it. I'll continue to do webinars now every single Monday at noon. I'll do a live stream to talk about what's going on, to answer questions, and to share updates. So one of the things I want to talk about right now is my Dream for All calculator. It's an amazing tool that is going to allow you to look at what do you qualify for? How can you get a home? How can you tap into this Dream for All money? So click this link, or not click the link. The link is in the description, but the description or the URL is right here. It's app.californiadreamforall.info, free registration. You can actually go to calculator, app.californiadreamforall.info/calculator. You can run a free calculator, get a rough idea of how much money you could qualify for, how much money the monthly payment's going to be, what the options are. I have a lot of great tools there that will help you figure out what can you do. Okay, so finally, the last thing I'll say is come join me Monday, 12 noon. If you're interested in the program, it'll be on my Dream for All channel. The link for that is down below as well. If you have any questions and you're watching live, feel free to post them now. If you have any questions about anything, I'm here to help. And if you're watching recorded, please put it into the chat or the comments on YouTube or Facebook, wherever you're watching, and I will happily get back to you that way. Aside from that, guys, for this live stream, this is my last one that's going to happen this year. I hope everybody has an absolutely very, very Merry Christmas and a great New Year. We will see you 3 weeks from now for this weekly live stream. I'll be doing a live stream every Monday starting next week just on the Dream for All program. Thank you, thank you, thank you for listening. Thank you for sharing. Thank you for helping with my success during this year. And thank you for allowing me to help with your success in becoming a homeowner or continuing the journey of home ownership and helping you to make all your home ownership dreams come true. So thank you, everybody, for joining. Merry Christmas and Happy New Year, and we'll talk to you soon. Bye-bye.